Hello students, let us recapitulate what we had discussed in the last class. In the last class, I had shared with you all a video in which I had discussed the final accounts of partnership firm and the components. That is, if you remember, it's very similar to sole proprietorship firm. The components of final account of a partnership firm includes trading account, then profit and loss account, then profit and loss appropriation account, and the balance sheet. So this time this new account is added, and the components of each account I had discussed in the last class, so that you can just recapitulate what you had learned in HS first year. Things are very similar, dear students. Now today I'll be discussing about the various adjustments that appear in the final accounts, and also how to calculate the capital in the balance sheet. So you see, in the question, you will find that a trial balance will be given and there will be some additional information. In the trial balance, there will be two sides, debit and credit. On the debit side, you will get the items of assets, expenses, and drawings, right? The debit balance items. And on the credit side of the trial balance, you will find items of capital, liabilities, and revenues. All the items you will find on the credit side, the items that have credit balance. And apart from that, you will get some additional information. For example, you will get closing stock, then you will get amount will be given. You will get depreciation, you may get income received in advance, rent outstanding, so on. So how to treat, we have learned in HS first year, and this time things will be more or less same, except with the special entries relating to partners, capital, or current account. And here you see, where will these items go? I know you remember. We are going to make trading account. We are going to make profit and loss account. We are going to make PL appropriation account, and we are going to make balance sheet. Okay. So assets, where they will go? We will go to balance sheet asset side. Expenses. Expenses are of two types, direct expense and indirect expense. Direct expenses will go to debit side of trading account, and indirect expenses will go to debit side of profit and loss account. Drawings, it will be deducted from capital accounts. Capital, they will appear on liability side of balance sheet. Liabilities will also come on liability side of balance sheet, and revenues, sales will come on credit side of trading account, other revenues will come on credit side of profit and loss account. And what about the additional information? Additional information means such items which have not been treated for before preparation of trial balance. So they do not have any impact on the trial balance. For example, stock. We calculated the stock after preparing the trial balance. So the trial balance does not contain any information relating to stock. That means we will have to complete the double entry in the final account itself. So for closing stock, we will have to pass two entries. Double entries means debit and credit. We'll have to make two effects. So for every item of adjustment, there will be two effects, one debit and one credit, both equal in magnitude. And regarding the items of adjustment, there are many items, but the most important ones I'm going to discuss with you all today. Just wait for a moment. So the first item of adjustment is closing stock. So closing stock means the amount of stock at the end of the year, and it may appear in the trial balance or it may appear in the additional information or adjustment. So if it appears in the adjustment, then there will be two effects. What are the two effects? Firstly, it will come to the credit side of trading account. In the trading account credit side, we will write by closing stock and we will write the amount in the amount column. And in balance sheet, because it is an asset, stock is an asset, so it will appear in the asset side of balance sheet. Okay. But suppose it is given in trial balance. If it is given in trial balance, that means already the effect of closing stock has been incorporated. That means the amount of purchases that is given in the trial balance already has got the deduction of closing stock, and so the effect of this closing stock appearing in the trial balance will be asset side of balance sheet only. So I want to revise again. Closing stock, if it appears in adjustment, there will be two impact: credit side of trading account and asset side of balance sheet. But if it appears in the additional information, then if it appears in the trial balance, then only one impact, that is asset side of balance sheet. So in trial balance, only one effect. Let us come to the next adjustment. Next item is depreciation. Depreciation, say the amount is rupees 1000. So if there is a depreciation and if it appears as an adjustment, then it will have two impacts. The first impact is that we will show it in profit and loss account. Which side? Debit side. What will we write? We will write the amount of depreciation. And the second impact will be in balance sheet. In balance sheet asset side, obviously the depreciation is on any particular asset. Say the depreciation is on machine. So say the value of machine is 10,000. Then we will write machine 10,000. And from that, this depreciation we will deduct. We will write less depreciation 1,000. And the total amount, that the net amount that goes to the outer column will be 9,000. So where did depreciation come? The amount of depreciation came on the debit side of profit and loss account, and in balance sheet it got deducted from the concerned asset. The amount of depreciation got deducted and the net amount of the asset is transferred. So this is the treatment if depreciation appears on the as an adjustment or additional information. But what happens if it appears as an item of trial balance? Then they cannot show two effects. If it appears in trial balance, there will be only one effect. So not adjustment, it appears in trial balance. So if it appears in trial balance, that means from the asset, the amount of depreciation is already deducted. Asset also appears in trial balance and the amount of depreciation is already deducted. That means no need to show this effect. Only you will have to show it in profit and loss account debit side, the amount of depreciation to treat it as an item of expense in the current year.